Okay, everybody, the ending part of the countdown. So we are ready to get started our session today. Before I begin with a proper starting process of the session, I would like to ask you please to say a quick hi in the comments box, a quick hello, quick yes, just to confirm that you hear my voice, so that way I know we are properly connected and technology is our ally, so we can conduct the session properly. So I'll be looking for those hellos and yeses in the comments box. Please go ahead whenever you can. Okay. And in the meantime, as I already started receiving your yeses and hellos, thank you so much, guys. In the meantime, let's begin with our session. Today is January 16, 2019. Today we are together to do a get-together longer-term session. We're going to be looking at longer term peaks. Okay, we're going to be looking at the markets from a longer term perspective, knowing that longer term means anything above and beyond intraday trading. So intraday, I think the name says it, means that you trade within the day. Anything above that, it's longer term. It could be trades that take a couple of days, a couple of weeks, a couple of months, a couple of years. Any sort of trading that is beyond intraday. That's what we are discussing today. And I have plans to look into the options markets. Okay, that's going to be the main focus, but we can certainly also look at other markets as well. Okay, nice to see you all guys. Very, very nice to see many familiar names here from prior sessions. So wonderful. Loving spending this time all together in the get-together sessions. So let's begin. Disclaimer. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstrations do not indicate in any way the results you may receive on using our products. Here we go. We got it. So we got the disclaimer out of the way, and now it's time to jump into our trade. So here's our form, and we are ready in planning trades. I'm gonna also very quickly, as we begin with TradeStation, I want to give you a very important reminder. I always talk about when we start our sessions. I'm going to do it right now, but even before, take a look at this list, okay? List of markets that I have here sorry, I just clicked in the wrong place. Take a look at the list of symbols, okay? I got 19 starting from ABT, which is Abbott Laboratories, all the way to Win Resorts. We're going to look at potentially 19 symbols today. That's the idea, probably much less. Because we'll stop whenever we find an opportunity and we'll plan it properly. So probably we will not. But just know that all those 19 symbols are going to be our starting point. Okay, so the idea today for our longer-term session will be to plan options trades. And I have selected 19 markets for us to explore together, and then I will remind you why is that. Okay. Now, a quick reminder as well. Let's do this quick, since some of you have seen this before, www.tradewithufos.com. This is our website, okay? Probably not new to anyone in here, because you probably clicked in the Get Together button on the upper left at some point. That's how you found out about the schedule, talking about the schedule. Take a look, because we have added information concerning the whole month of February. So there is a lot of information here in the schedule now. You can scroll down and you have information all the way to the end of February. You can see all the planning that we have in front of us. So it's going to be tons of support. And most importantly, when it comes to this support, make sure you all understand that we are not planning to support you just because we want to be, I don't know how to say it, kind of like nice from the point of view of supporting you just because we want to support you. What we want to do with the support is to get to a point where the support is really customized to the needs that you have. So it's not only supporting for the sake of supporting, it's supporting so it actually takes you to the next level or makes you a better trader, okay? So for us to be able to do that, of course, we have an initial plan, okay, which I'm sharing with you here. But most importantly, this plan will become more and more useful to you the more we interact. So another way to say that is please send your questions to us, okay? Apart from you, filling in the form here in the bottom. So, we send you the links to get together like we are doing today, etc. Beyond all of this, you have the reach button on the upper right, okay? Or if you, instead of, typing here to send your messages and your comments, your questions, your needs, send an email, you can certainly use reach at tradewithufos.com, and that way we will collect all those questions that you have and make it a part of all the support you will get when we do get together sessions. Okay, so that way those sessions, apart from trading and looking for picks and executing market opportunities and growing our accounts and growing as traders all together. On top of that, it also helps you to grow from the point of view of the knowledge, the skill, the mindset, all those different parts that are so needed in trading. Okay, Facebook and LinkedIn. Let's take a look at this. Okay, we have a Facebook page and we also have a LinkedIn page. Why is this important? Well, because, I guess some of you like Facebook, some of you don't like Facebook, some of you like LinkedIn, some of you don't like LinkedIn. So, we do both, so everybody's happy. And what are we doing in those pages? Well, in those pages, we are doing a lot of sharing trades from users of the AutoUFOs, and those trade examples are really, really useful. Here we just got one here from Orlando, who is with us today. How are you, Orlando? And a beautiful trade. He had a specific rationale. He was looking at RSI, stochastics, Fibonacci extensions, all of these combined with the UFOs, and he came up with a specific trading idea that he executed, ended up with a profit, which is even nicer. Okay, sometimes those trade examples actually would be losing trades, which is also very important because we learn from both, the good and the bad, because trading implies profits but losses too, right? And we need to learn how to profit professionally, but also how to lose professionally. So those trade examples from different users of our app are often very powerful to help you clarify more and more, how should you trade, and give you ideas that you may want to incorporate in your personal trading plan, and therefore, help you grow by watching other professionals in the marketplace. Okay. So just keep all of this in mind, okay? Next one, and this is going to be the last I would like to share with you today. It's again another page that most of you are, is the TradeStation Trading App Store. Okay, so this one is really I'm sharing with you, especially for the traders that you are watching this recorded. Okay, so if you're watching this recorded, it will be important for you to know when you ask yourself, how do I get access to the AutoUFOs that we have here featured in the App Store as a showcase app? How do you do that? Well, you just come into the search box, type UFOs, for example, short name, click on the green button, and it will do a search, and it will give you direct access to the link with the AutoUFOs. And I think it's pretty self-explanatory. You can either activate your free trial, or you can click on the subscribe button if you want to have a long-term access to the app for you to use into the future. The long-term access to the app, of course, is a subscription-based type of technology app, and therefore it implies a payment of $89 a month. If you want have it for free for a few days, and you just click on the yellow part of the button. If you want it for long term, you click on the blue part of the button. It's as I said, quite self-explanatory. Okay, so again, a little bit of housekeeping, getting organized here. Some of the things I said, of course, I am aware that some of you are aware of it, nothing new, but at the same time, for the traders that you are new to our sessions and so on, or just as a reminder, it's always healthy to talk about. Okay, so back to TradeStation here, and let me take a look at a question from Chuck Phillips here before we begin. So, how are you, Chuck? I am new to UFOs, I took a trade yesterday on a 15-minute zone, and 5 minutes later, that zone disappeared. Is this normal? Yes, yes, it is. Take a look. Take a look at this. And again, it depends on the settings that you have activated for your UFOs as well. Okay, but if I come to this workspace, for example, and I want to activate here. Okay, let me use a. You said you were using the 15 minutes. Okay, so let's move to the 15 minutes. So here is a particular green UFO. So let's say this market came into the green UFO and bounced. Well, depending on, remember, the AutoUFOs is an app that what the app processes behind the scenes is information in order to identify where the on-field orders are in the market. And of course, the app is running a series of assumptions because obviously there is no way to know for sure 100% where are the on-field orders in a market that belong to a certain institution and how many on-field orders are still left waiting to get filled. Knowing all that information beginning to the end with precise, exact figures, it's completely impossible unless you trade for Goldman Sachs and you are the person placing those orders. Is that making sense? So, the app is running a series of assumptions, and when the app understands that the quantity of orders left is very small, and therefore it does not produce a high probability opportunity anymore, then the UFOs disappear. Notice that we actually have a different type of shadings. If you look at this UFO is dark green, where this UFO is light green. Why is that? Well, because the app understands that the UFO below has a lesser quantity of on-field orders left behind. And therefore, the probability of a higher quality trade is less compared to when the UFO is darker color. Okay, and here, by the way, it's an easy one to understand because you can see how the on-field orders were here. You can see the beginning of the green box. Okay, the circles is the UFO if you wish, but the UFO somehow is pointing at the beginning of the green box here on the left, right? And you can see that there were on-field orders here, and then the price went up, 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 up. But after going up, let me zoom in, and you'll see exactly what I'm talking about. After leaving the green box, you can see the next candle came back, okay? And there was a little bit of a retest of the green box right here, okay? That little retest, which may look not relevant, well, that retest consumed orders. So out of the original pile of on-field orders waiting to get filled, some of them were filled, leaving less on-field orders behind. And then not only that, later on, it came back again. So now it didn't go too deep or anything like that. Most importantly, it didn't hit the dark circle, which is where the app understands there is the greatest concentration of on-field orders. So therefore, the app is still drawing that lighter green box on the screen because the app is basically telling you if you were to take a trade at this level, it's not crazy. You still have odds in your favor, even though you would have more odds in your favor if you were to use the darker ones because you have more on-field orders waiting to get filled. Okay, that's what he's talking about. So what happened to you, Chuck? Again, I didn't see your trade, but I'm pretty sure what happened to you, Chuck, probably is that when the market you were trading came back to your 15-minute green UFO, probably it either spent too much time bouncing around before it really took off, and all this time bouncing around was consuming many, many, many orders, or actually it went all the way to where the dark circle is and where the app understands there is the greatest concentration of orders. The majority of those orders that represent the greatest concentration, those orders were filled. And if that's the case, well, now this green UFO does not represent a higher probability opportunity anymore. Why? Because too many of the on-field orders were filled. And what the app does is automatically remove that from the screen. It's not telling you by erasing the UFO from the screen. It's not telling you get out of the trade because you're already in the trade. You have your entry, stop, target, your risk, your reward. You have everything in place already. So you don't necessarily need to leave the trade. But what the app is telling you is that no, it's not a good idea to enter a new trade now because you don't have a significant amount of on-field orders left behind. So that's basically what this is telling you. Okay, and that's why you saw the UFO go away. So these, depending on the settings that you have, okay, that parameter here with hide heat UFOs, if you were to change it to false, notice how many of those UFOs that were not seen before are still seen. So notice, for example, this one here. Okay, I think it's a great example based on what I commented earlier. Notice how the price left, and then it came back and bounced, and it came back and bounced, and it came back and bounced, and it came back and bounced again, and came back and bounced again. That was a fantastic UFO. But with all those coming back and bouncing, every one of those coming backs implied filling orders. And every time you fill orders, you leave less unfilled orders behind. And most importantly, notice that their circle, if I look at the circle here, okay, if I was to move the circle, okay, notice that this market went deep enough to where the circle was. In other words, where the app understands you have the majority of unfilled orders left behind, those unfilled orders were taken out. So if your setting on the input parameters of the app were to be hide heat UFO, you were to have this as true, well, notice that this circle located at 2579.5 is gone. Why? Because you may still have a few unfilled orders left behind, but the app understands very few. So to keep it simple, it just deletes the whole UFO out of the way. So you only focus on what's relevant or what's higher probability. Okay, that's what the app is doing. And that's why in your trade example, Chuck, you saw that happen to you on the screen. So very simple. If you don't want this to happen to you, change the setting from false to true. Sorry, from true to false. But again, probably it's going to make your life easier and probably even better trading results if you were to keep it the way I just displayed for you. Okay. So hopefully this explains. Okay. And please go ahead and let me know if this clarifies your question. Okay. We have a supply and demand trader here. How are you, supply and demand trader? So 89.95 of the tool amount and around 14 online mentoring sessions were valid. Oh, thank you so much for saying that. Yeah, I mean that's the intention, isn't it? The intention is to provide the greatest value as possible for you guys. Okay, so yeah, definitely. I mean, a little stop up, maybe even more than that, isn't it? Anyway, so very good. And let's begin with our session. So I'm gonna switch from this workspace into the other workspace I had before, which is the one that you can see right now, which is the one where I have a scanner running, which I already activated, where I was filtering for US stocks. And I remember sharing this with you before. Let me do it one more time. I have here where you can see all the parameters I have activated. Okay, so now pay attention, make sure you understand this one here, the moving averages is on check. So even though I have a moving average parameter here, notice that is on check, so forget about it. Okay, no, it's like it's not there. So basically what I'm doing is I'm looking for stocks with a price greater or equal to $50 per share. I'm looking at stocks where the average volume in the last 3 months has been at least 500,000 shares. I'm looking for stocks with an open interest available for options, for all options, all strikes, all expiration dates of at least 100,000. I'm looking for stocks with an implied volatility, which is great. And the way for me to filter that is basically I'm telling the scanner to look at all stocks in the market, but only chart for me, only list for me the 25 stocks with the greatest implied volatility. So basically I'm focusing on the 25 stocks in the US market, greatest implied volatility. And also I'm looking at a DMI with the 80 lesser or equal than 25, which if you remember prior sessions that we did before, basically what this is going to return for us is it's going to return stocks that are trading in a sideways mode. Okay, sideways mode. Stocks that are moving sideways. Why? Because today we are doing a longer term session and exploit the use of options for non-directional trading. Okay, And I said this before, and we will, guys, throughout the following weeks, the following months, especially when we spend time over the weekend and we do sharpening sessions, okay? Again, let me bring the calendar here so everybody knows what I'm talking about. Okay, get together and take a look at some of the sessions here. You will see that in a sec are marked as sharpening, okay? Sharpening. So when you see, for example, January 27, sharpening, February 10, sharpening, February 24, sharpening. Okay, so all those sharpening sessions basically would be the days where we don't trade. Why we don't trade those days? Because the market is closed, it's the weekend. So what do we do those days? What do we do those days? Well, we sharpen. Okay, we get better at knowledge, skill, market theory, options, anything. Okay, anything related to whatever we need to trade better. Okay, so that those days we'll spend time talking about options, non-directional trading, etc., etc. So if you are an options trader already, of course you'll be able to follow 100% what I do today. If you are not an options trader, well, it may be a little overwhelming. If that's okay, I would like to ask you to just be patient with me. Okay, because even though it may be a little overwhelming if you haven't traded options before, still keep watching, because that way the days we do the sharpening, what I'm going to teach you is not the first time you saw it, and therefore it will click very, very quickly, and believe me, it's going to be powerful. Okay, so you'll see that, and we'll be able to take advantage. Okay, so non-directional trading means that we're going to be selling options and letting them expire. And how do you profit from that? Well, you just need to make sure the stock doesn't move too much. Okay, because when you sell an option, you collect premium, because when you sell, you get paid, right? So when you sell options, you collect premium. But what will happen with the option in the future? Well, the option will expire. So as long as the stock hasn't moved too much, the option will expire, what is known as worthless, and therefore the premium you collected, you keep it, and therefore you made money by allowing time to pass and having a stock remain sideways or not to move too much. Okay, that's the idea. So how do I know the stock is not going to move too much? Well, the UFOs are going to tell me. If I only got green UFOs and I have no red UFOs, then the stock is likely to move up. If I only got red UFOs and I have no green UFOs, then the stock is likely to move down. If I have UFOs that are green and red both, then the stock is likely to bounce up and down and therefore remain sideways for a while. So what am I going to do? If I have a setup like this, I will sell options, collect premium, and wait for time to pass until the expiration date. That's it. Okay, it's actually probably one of the simplest ways on how to make money, because think about it. What is more likely? And please feel free to type in the chat box. And I see a few more comments and questions. I will take care of that in a minute, Orlando. Okay, and thanks for that as well, Chuck. So and please answer this in the comments box. Okay, so I can see your feedback. So question for everybody. Okay, and forget about, let's say we don't have the UFOs. Okay, because the UFOs, of course, they should help you, right? They should make your life easier, more precise, etc. But let's pretend we don't have the UFOs. And I ask you this generic question. What is more likely for you when it comes to making money? What is more likely? What is more likely? I'm going to give you two choices. Choice number one, to catch a market movement from the beginning to the end and be precise when you enter. So your entry and your stop are close, and your entry and your target are far. So you get a good reward to risk ratio. So that's option number one. So what is more likely? To catch a move precisely beginning to the end? Or option number two, instead of betting where a stock is going, bet on where the stock is not likely to go. Okay, so instead of betting which UFO is going to work, give yourself 3, 4, 5 UFOs on top of each other. And instead of betting it's going to bounce and turn and go to this place, you are just betting it's not going to go through, let's say, 5 UFOs. So what is more likely? To bet on where the market is going beginning to the end with precision, or bet on where the market is not likely to go, right? So what a simple question. I think that as you guys answer in the comments box, I'm pretty positive we're going to agree that the second case is a higher probability case. Is that making sense? So that's exactly what I want to do here. Okay, I want to sell options, betting on where that stock is not likely to go, get paid premium by selling those options, and let the options expire. And if I'm right and the stock doesn't go to that place, the options will expire worthless, which means that I keep the premium collected and I don't have to do anything. Okay, and then of course, we'll need to talk about what if it goes to the place where it was unlikely but it still goes. Well, then we'll need to use contingency. We need to have a contingency plan to offset the risk of the trade. And we're going to do all of this with options. But basically, non-directional trading means to position yourself in the market where you're going to profit from markets going nowhere by betting where the market is not likely to go instead of betting where the market is likely to go, which is a higher probability. Time, sure thing, and collect premium to do that. Of course not. Is it going to be higher probability? Probably yes. And now you add the UFOs on top of what I said, and that will be the subject for pretty high probability trades. The other day, for example, and we had an incomplete example of this last week. Okay, so today, as we spend time together, will be more and more complete. For example, we were looking at IBM. When we looked at IBM, the vertical line was last week when we were together. This is a 60-minute time frame of IBM. The two horizontal lines was the top of the red UFOs and the bottom line was the bottom of the green UFOs. So in other words, the horizontal line in the middle together with the vertical line in the middle, that cross, okay, where my cursor is, that was the day we entered. And what was the bet? The bet was that this IBM stock was not likely to reach 129.60 anytime soon and was not likely to reach 111.61 anytime soon. So what did we do? We sold options, we collected premium, and we are letting time pass, and this thing is moving up and down within those UFOs. Okay, and probably this trade will end up as a profit. And if it doesn't, then we'll talk about what to do as a contingency plan. So if we lose, is limited. Okay, guys? But that was the idea. Okay, now the other day, of course, the more time we spend together, the more details I can give you and so on. The other day, we didn't have time enough to go over all the details. So, I remember giving you this trade very, very quickly, a little too quickly, I should say. So we'll continue working on that as we keep progressing to make your understanding and your efficiency better and better. Okay, but that's the idea, and I wanted to rephrase it before we begin. So let me take a look at Orlando's question here before I begin. Orlando, higher the curve in an uptrend, do you recommend to go long? Well, the question is, do you still have room for the trend to continue expanding? Right. So if you still have room for the trend to continue expanding, it doesn't matter you're high in the curve, right? If you're high in the curve and your UFO is very, very wide, your entry UFO, let's say a green UFO, is very, very wide, meaning that the distance from entry to stop is a lot, and the red UFOs are too close, which means that there is no room for the trend to expand. Well, then you're going to get a small profit in exchange for a great risk. Then don't do it. But if you are high in the curve, the trend is up, but the red UFOs are very far away, and your green UFO that you use to enter is not too wide, meaning that the distance from entry to stop is not too much, and the red UFOs are very far away, go for it. Why not? Is that making sense? So again, remember the concept of the trend. Okay, the trend, it means many things and means nothing at the same time. The trend is simply price movement from UFOs to UFOs. That's it. Okay. Good question. Supply and demand trader. Bet on where the market is not likely to go using supply and demand UFOs. Very good. Very, very good. Very, very good. Another question here from Fernando. Can this work also on short term? Absolutely. Because when you look at the options, you got all sort of expiration dates. You got options that expire in 1 week, in 2 weeks, in 3 weeks. So you cannot really enjoy non-directional trading intraday because you would only have 1 day of time passing, okay? And the shorter expiration date you will find is 1 week. So, having 1 day of decay out of 7 days is very little. So it cannot really be efficient, but you could certainly do it for short-term trading. Short-term as, for example, a trade for 3, 4, 5 days, So if you want to do trades that are, 2, 3, 4, 5 days, you could certainly find opportunities to do so. Normally, we'll do more like 1, 2, 3 weeks, but you could certainly find those opportunities for 3, 4, 5 days. You could. Okay, now intraday, well, now you have very little time passing. Is that making sense? So then it would not be efficient enough. Orlando, would you wait for the pullback to Manson? This is a trading philosophy that is very, very relative. Okay. Yesterday we had a great example of that, Orlando. We had a good plan in front of us for a high probability trade. And if you were with us yesterday, you saw it. I missed the trade. I had a good plan in front of me. I was very happy with the plan. I shared the rationale with all of you. I missed it. Why did I miss it? Well, it's part of trading because my choice was to wait for the pullback. As Orlando is consulting here with his question, I was waiting for the pullback, and the pullback never happened. Why? Because it was one of those very strong days. So in this case, if you had done a breakout trade instead of a pullback trade, it would have been much better, right? But do you have a crystal ball? Do you know the market is going to go? Do you know when the market is going to move like a crazy rocket to the moon? Well, you don't know, not for sure. So if you were to do pullbacks, there will be times where you may get disappointed because it would have been better to do the breakout. And if you do breakout, there may be times where you may get disappointed because the pullback was better. Is that making sense? And you don't have a crystal ball, so you don't know what's going to happen before it happens, at least not for sure. So then you have two ways to approach this, Orlando, and this is a very good question. One way to approach this is just to have a set of rules in your business plan where you always trade the way you do. And that's it. And you always do breakouts or you always wait for the pullback. Done. And this is a valid way to approach it. Another way to approach it is a reward to risk ratio. Let's say the rival UFOs, for example, you're going to do a breakout to the upside, like yesterday. Let's say the rival UFOs are so far away. Well, what does that mean? It means that if you enter in the breakout, your stop is going to be far away. So you have a lot of risk. But at the same time, the rival red UFOs are very far away. So from a risk to reward perspective, the trade is justified. And therefore, you can do the breakout if you have UFOs that are far enough. And that would actually be quite smart to be done. Why? Because, and that's your question on when you TLB, I believe that probably you are referring to trend line breakout. So that's a very good question to be asked, and that would be a very smart approach. If you're far enough, do a trend line breakout. If your rival UFOs are, then wait for the pullback. That could be a valid way to do it. Why? Well, because if the rival UFOs are far away, probably you will have one of those days where the market keeps going and doesn't stop and doesn't pull back. Right? If you recall yesterday, especially in the S&P, and the Nasdaq was looking different, and I remember that. But the S&P futures yesterday, when we did the session together, had red UFOs that were simply not present. We didn't have red UFOs on the S&P chart. In other words, the app didn't identify sell on field orders anywhere close. So if there is no sell orders, what's going to happen to the market? It's likely to move up very fast. Just like if there are no buy orders that are still on field, what's going to happen to the market? It's likely to fall down very aggressively. So what could you do in a situation like that? Well, do the trend line breakout. Why not? You could do that. Okay. The key, as always, and I'm sure you are reading my mind, Orlando. The key is to have rules around what I just explained, So when it's time to do a breakout, you have rules that allow you to do it. And when it's time to wait for the pullback, you have rules that allow you to do it. So if the pullback doesn't happen or the breakout doesn't happen, you don't get frustrated or you don't find yourself in a situation where now you are wondering, what should I have done? Okay, you just follow the rules. Okay, and that's it. That's the idea. But anyway, let's go back to non-directional trading, okay? Because this is a very good question, Orlando, but a little related to yesterday. Because if you do non-directional trading, there is no breakout. There is no pullback either. You don't care. You just want it to remain in a range. Is that making sense? That would be non-directional. So let's focus on non-directional now. Even though, again, that was a very good question, and I'm sure that it was useful for everybody here. So thanks for that, Orlando. So anyway, so guys, I got multiple stock here, 19 to be precise. And instead of looking at 19 stocks, of course, out of experience, we all know some of the stocks are more liquid than other options are more liquid than others. So for example, PayPal is a stock that normally has a pretty decent level of liquidity. Okay, pretty decent level of liquidity. And on top of that, the options on PayPal normally they're pretty liquid too. And on top of that, normally they have some interesting premium built in, where other stocks, and again, this I'm just saying this out of experience, okay, and sharing the experience with you guys, and some of you may have noticed that as well. But there are stocks out there that no matter what the theoretical values of the options suggest, those stocks really have very little premium. So here I'm loading implied volatility stocks, which is a standard indicator with TradeStation. So this is going to show me the level of options premium, which in this case, it's looking like it's a purple color, meaning that there is some premium. It's not the highest premium in the market, but there is some premium. Options are not cheap. I don't want to sell options when they are down here, meaning that options are cheap. Ideally, I want to sell options when they are very expensive, okay? But it doesn't need to be very expensive as long as they are somehow expensive and I have somehow premium. I'll be okay selling those options. So it seems that PayPal is providing this for me based on the indicator, and I didn't even need to use the indicator because I did the scanner that was using this indicator, so I knew that. But as I was saying, out of experience, you also know, and if you don't, listen carefully, some stocks out there always have very little premium built in. Example, Verizon, such a boring stock. Example, Coca-Cola, normally options got such a little amount of premium built in. Why? Because those stocks move very slowly. It's so boring to trade. So, and other stocks, are much more interesting, like PayPal. So I started with PayPal today. I could have started with any of the list, but just out of experience, I know normally there is some premium built in and that stock normally moves. So what else do I need? Well, I need UFOs. Okay, so that's what I need. So let me go ahead and load the UFOs to see what we have. Okay, and this is okay. So it seems that we may not have a good trade here. Let me see. So this was September. I think that's probably all-times high. Let me take a look. I'm looking at the monthly. Yeah, September was all-times high for PayPal. Okay, so in this case, we are not going to have a possibility to do non-directional trading with PayPal. Why? Because for me to do non-directional trading, remember what I said before, I would like to have multiple UFOs above and multiple UFOs below, multiple red UFOs, multiple green UFOs. And in this case, because we are so near to the all-times high, well, notice that they only have one red UFO. Okay, one red UFO that seems to be working. You can see here, I went way too far. You can see here, PayPal is getting into the UFO, hit the unfilled orders and started dropping. So, we got the unfilled orders, but the problem is that I only have one UFO. So that will not qualify as a proper setup for non-directional trading, because non-directional trading means you expect the stock to remain range bound. And for this to happen, you need multiple red UFOs and multiple green UFOs. Okay, so I'm going to go for another one. Another stock that has good options is Goldman Sachs. So let's take a look at Goldman Sachs. Good liquidity there. Less volatile than PayPal, even though it belongs to the same industry. Okay, but look at that. Now here we are having a different scenario. okay, in the sense that we have green UFOs and huge collection of red UFOs out there. So that could be interesting. Now, I can see a huge gap on Goldman Sachs, 3.95%, and this triggers two thoughts in my mind, which I want to share with you. Number one, I'm wondering, why is it that Goldman Sachs is gapping so hard? And probably it's earnings reports or something like that, or maybe it's a news. So I want to take a look at briefing.com. You can use any other website as well. There are many websites that will talk about company earnings and so on. I like briefing.com, so I'm put GS to find out about the earnings reports. And notice what's happening. 16th of January, before the market, that was the release of the earnings. Okay, and that's the reason why this stock is really moving strongly. So thought number one, I was wondering why this happened. Is the earnings. Thought number two, now I'm concerned. Why? Because if this is happening because of the earnings and the earnings are already public, well, now probably I'm going to find less options premium for Goldman Sachs. So even though my scanner gave me the information about Goldman Sachs, like Goldman Sachs got, plenty of premium in the options, I may not have that. Okay, why? Because TradeStation gives you end of day data for options. So I'm gonna have to change to the daily time frame here. Okay, daily time frame. Here we go. I'm gonna reactivate the implied volatility stochastics. Okay, so I get to see the value for implied volatility, which is 48.07. And the first thing I'm going to do before I continue, because I don't want to waste time, we also need to be efficient as traders. It's not only about high probability, it's also about saving time, which AutoUFOs saves you time, but also not only AutoUFOs, you as a trader, you want to be efficient too, isn't it? So what I'm going to do before I get to do the chart analysis with the AutoUFOs, I'm going to look at the options. So I'm loading OptionsStation Pro. I'm going to look at the options on Goldman Sachs, because one of the columns is the implied volatility, which is real time. So give me 1 sec, because I got the Goldman Sachs screen loading in my other screen. So I'm going to drag it into the screen I'm sharing. Just give me 1 sec. Here we go. Okay. Here we go. So Goldman Sachs, okay. And when I look at the options, okay, notice I have a column here which is implied volatility. Okay, so which if I close it, notice how it gives you the percentages here. And notice that even though yesterday, end of the day, volatility was 48, today, real time, we are talking about 36s. Okay, 36s, 35, 32. In other words, the level 30% now. So what's happening to this stock as the market just opened 15 minutes ago? Well, everybody see the earnings report. So all this excitement before the report is now vanishing, is going away. So it's not looking too good. Is that making sense? So instead of putting time into this trade, I'm just going to do a quick, super fast confirmation, but probably I'm going to use a different stock symbol because, after earnings, okay, this is something you need to know in case you didn't, the options prices go down, okay? And remember, non-directional trading means selling options. So when you sell options, you don't want the prices to go down. You want the prices to stay high, okay? And that implied volatility going down from 48 to 30 something is a very bad news. Okay, so let me take a look at 176 here very quickly, because the only place where I do have a lot of premium is here in the front month. So 177, well, is paying nothing, 20 cents only. Okay, so yeah, so forget about it. So no Goldman Sachs for us. Okay, so let's go for the next one. Let's look at Microsoft. And while I'm looking at Microsoft, I am also going to look at the earnings reports for Microsoft, which is January 30. Okay, so Microsoft seems to have some premium built in, but notice how the earnings for Microsoft are not happening until the end of the month. So that's a good news, because I have options, okay, on Microsoft. I have options on Microsoft that expire on January 25, okay? So those options may be a good choice for me to do some non-directional trading with Microsoft as long as I have the UFOs where I need them to be. So here is the 60-minute time frame of Microsoft, and what do we have? Well, we have green UFOs below, we have red UFOs above. This is looking good. So what if I was to bet that Microsoft is not going to reach this price level? In other words, what if I was going to bet, let me use, yeah, I think a circle would do the job. What if I was going to bet that Microsoft is not going to reach my yellow circle? Well, then I will want to sell 116 options. So how much would that pay me? 116 options will pay nothing. Got it. So, and you can see it here as well, where the prices of options on February 1st is much higher than January 25. Okay, so those options don't have premium enough. So next one, no wasting time. Let's find the next one. So what else do we have here? Tesla. Tesla could be another good candidate for us to check if we're going to have an opportunity to do non-directional trading with. So loading Tesla as well to have greater visibility of the earnings reports, which are going to happen on February 6, okay? So maybe I'll have an opportunity there with Tesla to do what I need to do, okay? So I got my options loading for Tesla. Loading, you know, I could use February 1st, okay, but this is still Microsoft, so it's still loading. Now it's Tesla, very good. So notice how 25 and 1st of February, I have more or less the same level of premium in the options, 61, 62, more or less the same. Of course, February 8, which is after the earnings report, got more, but now notice that they have little difference compared to what Microsoft gave us. So I may have an opportunity here, and I don't have risk with Tesla until I get to February 6. So let's get back to the chart, and now let's find out if I got UFOs or I don't. So look, I got 2 red UFOs in front of me. So let's begin with the upper one. What if I was to bet that Tesla was not going to reach this 374.58 mark anytime soon? What if I was to bet that Tesla is not going to reach 380 anytime soon? What could I do? Well, I could look at the 380 options and see if those options give me premium enough for me to sell. So let's begin. Everybody, I am back. It will be great. I just got a disconnection here for whatever reason with the internet connection. Please, in the comments box, go ahead and type a quick hi or yes, just make me understand that you hear my voice and we are back to be connected normally, which I believe we are. That would be great. So that way I know I can continue. I believe this should be fine now, isn't it? Cool. So thank you so much, guys. Okay, thank you so much. Sorry for that. So so let's keep going. Let's go for it. So what was I doing? Thank you so much, guys. What was I doing? So I was saying I got Tesla, UFOs on top of where current price is. Therefore, it is unlikely that Tesla will reach 380 anytime soon. So what if I was to sell the 380 options? Well, the 380 options, the ones that expire 2 days from now, those options would pay me 35 cents. You know, it's a little amount of premium, okay? And we'll talk more about what is little, what is less little. But if you look at the next expiration date, notice that the same 380 is paying you $278. That's a different story. Is that making sense? So we have premium built in, and we have no risk of earnings selling options on Tesla that expire on 25th of January, because the earnings for Tesla are on February 6th. So this, my friends, is looking good. So what am I going to do? I'm going to target this 380. From 350 to 380, basically we have $30, okay? So what I'm going to do is look down, $30 down, and notice that more or less $30 down, around 320, I got a green UFO too. Well, I'm going to have a bet. And what's my bet going to be? Well, I think my horizontal lines are going to represent what I'm about to say with words. My bet will consist of expecting Tesla to remain between the blue lines, okay, between the blue lines, anywhere from now until January 25. So where is January 25? This is January 25. Okay, so basically we are talking about filling candles. Let me draw a box here. So filling candles. Okay, we are saying we don't mind it's going to be, but we expect Tesla to be anywhere in this yellow box, anywhere from the current candle to the right vertical dotted line. Okay, so we expect Tesla to remain in that whole space, all that yellow area. Why? Because Tesla is in a sideways market condition, because we got two red UFOs above, and because we have a green UFO below, and they are more or less equal distance, and Tesla is now in the middle, right? And we may get there, okay, and we may be wrong on the trade, but I would say it's unlikely. And what we need to do now is to explore. So if that happens, you know what the outcome will be, okay? And this is when, in the world of options trading, we use simulation tools like the one I have on my screen right now, okay? And I'm going to add 3 prices because I need to predefine the price above, which is going to be, the price above is going to be, let's call it 380. I'm just going to keep this simple, okay? So oh, sorry guys, 380. I don't know what just happened. The same thing happened to me the other day here. I'm not really sure, but I fixed it. So 380, and the one below, it's 312. Okay, now 312, if you look at the option chain, I don't have the 312, but we should have, if I load a few more strikes, I have the 312.5. Okay, so 312.5, it's more or less 312.33. Okay, so I'm just gonna go ahead and use the 312.5 for this analysis. Okay, so 312.5 and last. Okay, and one more thing just to be visual, I'm just gonna use red color above and below. Okay, so the red color above and below represent that I'm wrong. Okay, wrong meaning that I am expecting Tesla to remain between 312.5 or 380 from now until January 25. So if Tesla was to exceed 380 or 312.5, then I am proven wrong, and that's why I use the red color to represent a loss. I am wrong. Okay. What are we going to do in this case? Well, and we'll talk more about that in the sharpening session, but I'm going to do an iron condor. Okay, please, please, please don't when you see those fancy names that we use in the world of trading. So I'm going to analyze selling an iron condor, even though it sounds very intimidating, iron condor, all those things. Just don't be intimidated by that. It's just names to explain properly what is an iron condor, what does it do to you, how do you profit from it, etc. So let me put it together here. And then I'll explain what I have done. I need to click a few times to get all of this adjusted properly. So let me do it first, and then I will explain it. Good. So what have I done at this moment in time? Well, what I have done is to set up my strikes in a way where I am selling, notice on the left, red color, sell. I am selling the 380 call and buying green color. I am selling the 380 call and selling the 38. Sorry, let me rephrase that. Selling the 380 call and buying the 385. Okay, so let me write it down. I am buying the 385 call and selling the 380 call. Okay, above, and then below, I will be using puts instead of calls, and then all of this. So 12.5 put, and I'm going to be buying, should be selling. I'm going to be buying the 307.5 put. Okay, notice I'm using $5 of strike price increments, in between. Okay, we'll need to talk about stops and what's the ideal strike and how to adjust this in a way that is optimal. All those things. Not today, obviously, because today is a trading day, so I will not have time to explain all of this. Okay, so if you're an options trader, you know what I'm doing. If you're not, just be patient with me. Now, for now, you're seeing it, and then we'll spend time, quality time, to explain all of this properly. Okay, in the sharpening days. Okay, selling puts below, we are selling calls above, and basically, if I was to do that, this would do to me is if I do it at market price, it would pay me $92 per condor. In option trading, in case you don't know, every time you see a decimal place, you need to multiply times 100 because options trade, the price of the options that you see here are per share, but the options contracts, the calls and the puts, they are standardized in the US market and they represent 100 shares each. So whatever you see here needs to be multiplied times 100. In other words, if I sell the condor, paid $91, $93 per contract if I do the market price, okay, which we never do the market price, we always shave. So you can get anywhere between 90 to 163. That's the whole range, the bid and the ask, okay? So normally we go for the mid or something like that. So you may get $100+, okay? So this condor would pay you $100+, and if you lose, the theoretical profit and loss will be 160 above or 127 below. So it's kind of like a 1-to-1. You're making 100+, you're risking 100+. That would be the initial part of this trade. Okay. Now for non-directional trading, 1-to-1s are normally well accepted. Okay. And here's why. Because now, the moment you sell the condor, and you know what? Let me do it. Let me go ahead and I just want to have a vertical line there, so then we'll be able to track this in a better way. Okay, here we go. So vertical line, horizontal line. So I'm trying to emulate with those lines the price at which I got in. Okay. So this is the moment in time when I got into this trade. Okay. And Okay, and I'm gonna sell one contract. Of course, we'll talk about size of the trade and everything, but right now I'm just gonna do one contract, and I will do the market price. Okay, so whatever the market gives me, I'll take it, just to do it quick, which we don't do it like that. We'll need to get deeper into it. So I'm just gonna sell the condor. So 1, 2, 3, yes. So the condor has been filled, and the trade is now alive. Okay, you can see I have it. I have here the 4 units. Okay, the 4 units of the condor, which I could actually of each other, and it would show as a condor. Okay, so I got the trade in. That's it. Okay, now what? Well, take a look. Take a look. Let's do some analysis. So yes, good. So now let's 121. Okay, this is what happens if I get stopped out now. But what if instead of getting stopped out now, I get stopped out on Friday? Okay, well, on Friday is only 2 days of time decay, so it's still showing 152, 113. So it went down a little bit, but not too much. But what if it gets stopped out on the 21 or the 22nd? Wait a minute, guys. This is not normal. This is not doing. Oh, I know why. Give me a second. Give me a second. So settings, expiration, expected price. No, too early is expiration. From data range. Now to earliest. Yes, now to earliest. That's good. So I don't know why it's. Let me uncheck. Okay, so if I check this, yeah. So I am simulating the trade I have in. For whatever reason, it's not looking the way I would like it to look. Sorry for that, guys. Just give me 1 second. I will find out what happens here. I deal with multiple versions of TradeStation, and sometimes, like I'm trying to drag it on top of each other, it's not allowing me. Sometimes they will do updates and stuff, and it's not looking like I was expecting to. So let me see. Okay, so guys, I'm having a little technology problem, and I don't want to waste too much time with the technology. So if that's okay, we'll talk more about that. Okay, but 1.6, I got it here. So nearest expiration, yes, setting. Oh, yes, I was using the wrong place, guys. Sorry for that. I just got confused here for a minute. Good. So now I'm going to be able to do it. So notice what happens if instead of, I got into this trade, right? I got paid 80 something, and let's call it $90. So the simulation is telling me if I get stopped out, I lose either 157 or 123, okay? But what if instead of being stopped out today, what if you get stopped out? Let me come here to the current date. What if I get stopped out in January? Here we go. What if you get stopped out in January 18? Okay, January 18. Sorry, guys, just 1 sec. So you can see it was a long time. I was not doing simulation with this particular computer I'm using today. The days were very far out. So I'm using a different version of TradeStation. Okay, so today is 16. Good. So look, if you were to be stopped out, if you were to enter the trade today with the expiration date of 25, okay. So you can see, 116 here on the left. You can see if you were to be stopped out, you would lose 160 above, 122 below. We saw that a few times. But what if you were to be stopped out on the 18? Okay, so now on the 18, okay, on the 18, notice how this number went down a little bit. Okay, this number went down just a little bit. It's not something magic because it's only 2 days of time decay. But what if now you move into, let's say, for example, next week, which is Tuesday? Well, you can see the gray line. The gray line keeps going higher, higher, higher. At current price, okay, at current price, you will be making $60. Okay, in other words, the market will have not moved, and you will be making $60. Where if I look at the simulation today, right? If I get in and I get out, I would be losing $36, which is the difference between the bid and the ask of the condor, right? So the market has not moved. I get in, I get out, and I lose. Why? Is the spread. But then what happens is that I have what in options is known as theta, which is the time decay. So now I'm making $12 a day, which this, by the way, accelerates through time. So now if I let time pass a couple of days, my minus 30 becomes minus 9. I go over the weekend, I get stopped out on Monday, Tuesday, whatever. Now I'm in a profitable position no matter what. Okay, we get a little closer to the 25. Let's say you get to the 24, and what happens now? Well, notice that you are making, 89. Okay, so that's pretty powerful. That's the concept of non-directional trading, where as time passes, okay, you are accumulating this time decay effect. And the beauty of this is that in a situation like what we have in front of us, for you to reach the stopping point above, you need a lot of movement to happen. And a lot of movement to happen could happen, but for that movement to happen, normally, because it's a lot, it would take some time. And what happened throughout that time? The options decay. And you can see how that theta is providing some profitability for you. So again, I'm a little sorry that technology may have made my explanation here not the smoothest of all the explanations I have given you before, but hopefully you got the concept of selling options, okay, selling strikes that are far out, so those options now, have a higher probability of expiring worthless, or at least if you reach the point where you don't want to reach, at least you have a lot of time passing before that happens, and that would decay the options. Okay, so this is a trade that we just put in the system, and we'll be observing it and we'll be learning from it. And later in time, we'll do sharpening sessions. I will explain many more details on how to build this properly, why I selected 380, why I selected 385, why I selected 312.5, 307.5, why the puts, why the calls. We'll be looking at everything so you understand the mechanics. Okay, but again, it will be very useful that when we do all of that and we look at it from a theoretical point of view, you have seen it from a practical point of view when we do the sessions. And of course, if you know about options already, you can certainly execute those trades with us, and potentially we can all profit from them together, okay? Anyway, so we just exceeded by 8 minutes the closing time of the session, guys. Normally the sessions are supposed to last for 1 hour, so I want to be respectful of your time, and therefore we're gonna conclude the session today. Could you please let me know in a little message on the comment box, how did it go today? Did it go well? It didn't? Did I go too fast, too slow? Is there anything that confused you? Please give me a little feedback so I can keep moving the direction of those sessions, to a place which is nothing more, nothing else than what you need. Okay, so we can help you more efficiently. Question from Orlando here. Question from Orlando. This is complex for me, who has taken several options courses with OTA, but OTA weakness is that they want to learn to use options pro via XLT, which I've put little time in it, and too much time for the reward. I get it. Yeah, I mean, the idea in those sessions, Orlando, is to be very efficient with the time. At the same time, for the traders that you have never traded options before, of course, we'll need to spend a little time so you understand the type of instrument that we're going to trade. We need to be We need to have a proper understanding of the instrument before we trade it. Okay, so I guess you agree with that one. Okay, I think a lot of people in this group is lost. It is if a session is needed to learn. Yeah, we'll do that. Yes, we will do all of that. Okay. Yeah, well, Orlando, again, please don't be intimidated by options. I read your comment here. Please don't be intimidated by options. I told you before, and believe me, it's exactly what it is. Options got all those fancy names. If I told you that we're going to build a broken wing iron condor, you're going to be very intimidated probably because it sounds intimidating. The reality is that the moment you understand and you break down the iron condor into what it is, it's such a simple thing. So when you talk about simpler option strategy, believe me, it's very simple. We just need to spend time to explain what it is, okay? Which we haven't, and we will, okay? But for the options traders in the room, I'm pretty sure that this was not confusing at all. Actually, probably you are seeking for more, isn't it? Supply and demand trader, great to have the live trading opportunity. Just putting the trade into my account now. Thanks, Jose. My pleasure, my friend. My pleasure. Yes, I'm gonna execute that one myself too. I'll conclude the session, okay? Because just shave a little bit the spread, okay? There is a little more premium to be taken than what I have done in this trade where I went for market price. Tesla provides a little bit of a spread, but at the same time, it's traded quite heavily. So keep in mind that market makers are, putting a little bit of their spread business in it. But if you shave a little and you're patient, you should get a much better price than what I got. Okay, so instead of 80 something dollars per contract, you may get close to 100, maybe even a little above 100. Okay, so be patient with the field. Okay, and we'll talk about the outcome of this trade in the future. Okay, very good, wonderful. You guys take care. Oh, by the way, I'm just realizing I missed a few questions here, so let me read very quickly. So. Let me see. Yeah, Mark, you say, Mark, that you have run. Sorry for that, Mark. I just missed your question before. You said that you have run the scan and you got a different list. Okay, and this is very simple. This is because you run the scan at a different time that I did. So, for example, stocks like Goldman Sachs that moved very strongly on earnings. Probably the ADX was above 25, and therefore they didn't show up on the list. So, of course, if you do it when the market opens, you may have got something different. But I will guess not too different, because remember, options data is updated at the end of the day with TradeStation. So the stock information may be different when the market is open, but the options information, we should have the same. So we should have had a similar list, I would guess. Okay, good. A good comment anyway. Yeah, I see. Yes, Mark. Yes, I know, Mark. You have you have lots of options experience for a few years. I am aware of that. Okay, so I know you are understanding. I appreciate that. At the moment, I also need to teach for the new people, traders that may not have your options. Okay, so everybody just bear with me. If I challenge you a little bit because I go a little too fast, just bear with me. And if I go a little too slow for you, just bear with me too. Okay, as we spend time together, we will align everything. Believe me. Okay, and that's my intention, and we'll get there. And last question here from Juan Carlos. You get your question on the screen as well, Juan Carlos. Okay, question on the screen. So on the daily, there are no UFOs on the daily at those levels. On the 60, they are there. Do you still take the trade? Yes, absolutely. Remember the concept. Non-directional trading means trading non-directionally, collecting time decay, etc. But now, of course, depending on the expiration date that you want to use, in this case, I was using January 25, which is only a few days from now. It's 9 days from now. Even 9 is 7, because the weekend, the market doesn't move, right? 2 days of decay for free. So it's 7 days. and even less than 7. It's 6 days and a half because the market today is already running, right? So, so basically, this trade is a pretty short-term trade. Even though it's a longer-term trade, it's not too long-term. Is that making sense? It's a 9-day trade. So if you want to do a 9-day trade and you were to use the daily timeframes, probably will not work because your red UFOs and green UFOs in the daily time frame are probably going to be further out. And if they are further out, you will probably use an expiration date beyond January 25, maybe February, maybe even March. Okay, so depending on how long-term you want to be, or how short-term you want to be, you would use different time frames. Okay, and also, to be honest, just a little extra added information here, and we go. Okay. You can, it's always advisable, okay, and we'll see what happens now, but normally, when you apply the UFOs to a lower time frame, let me activate the stats. So when you apply the UFOs to a lower time frame, so stats true, okay, you get 50.97%. If I apply those UFOs to a daily time frame, okay. Well, in this case, funny enough, is not what I was going to say, but in many cases, when you apply the UFOs to a daily time frame, it happens sometimes have a lesser number in the daily than what you have in the 60 minutes. Okay, and the reason why is because the stock market is closed for many more hours than what is open. So many times the daily time frame, which is relevant, it's often less relevant than the UFOs you see in the lower time frame, because while the US market is closed, which is the daily time frame, really many things could be happening. Well, the 60-minute time frame gives you a little bit of a better understanding of what's happening while the market is open, and many times you will see greater results from a statistical point of view. So I personally, for this type of trade, prefer to use the intraday timeframes instead of the daily time frame. Okay, but it doesn't mean it needs to be like that all the time. Okay, so in this case, actually, it was not the case. Okay, 50.97 and 51 point something, so it's about the same. Okay, but that was the reason. The most important reason is what I said at the beginning, Juan Carlos, to answer your question, which is the fact that I wanted to use January 25, and therefore I didn't want to go too far out in dates, and therefore the daily time frame would produce UFOs further out. Okay, so that's why I was using 60. That was my. But anyway, everybody, thanks for joining us today as always. Super pleasure to spend time with you. The next session will take place on January 22nd, so this is next Tuesday. It will be a short-term day. Until then, just be safe. Catch up with prior recordings if you haven't. You can click on this green button, YouTube sessions. You can catch up with the prior recordings. Send us questions if you have any, and be very, very professional and very, very disciplined in your trading, guys. Okay, I will see you soon. We will see you soon, guys. Take care. See you soon. Bye-bye.